The broader markets are in the red this morning as tension rises between Ukraine and Russia. How are you seeing this play out in the options market?
Well, what we're seeing this morning and late last week really is on the other side of that escalation. The typical hedging products, spiders, SPX, at the end of last week, we didn't see significant hedging activity. Similar this morning, the real action is happening in ETFs like RSX, which is the Russian ETF. And there, the largest trade is actually an opening seller of 21 strike puts. So they're expressing...
So what does that tell you?
They're expressing the view that there's really limited downside. They're going to get long stock about 10% lower, admittedly a decent amount lower, but they're pocketing $2 million in premium to express that view, and we're seeing similar activity in EEM. So really the option market right now expressing the view that this is not going to escalate significantly.
Interesting, because we did see the biggest sell-off in 5 years on an intraday basis in Russian equities today. But you think the options market says we're going to see a floor? That's
where the options market is now. Whether it's complacency or not, we'll see.
Yeah.
But they're certainly expressing that view. And also, it's worth pointing out, if you look at VIX options as well, the most actively traded line there is in March 16 strike calls, and it's a closing seller.
Okay.
So you don't see significant
So they're bracing for near-term volatility.
Well, in this case, they're taking advantage of the lift in volatility to book some profits rather than putting on new long volatility positions. Again, expressing the view that upside in volatility may be capped.
How about longer out? I mean, right now it is a significant move in volatility. I think the VIX is back up at 21. It closed on Friday at 17. So that's a pretty significant move, right? What are you seeing longer out in the volatility?
Yeah, not much. I mean, most people who are expressing volatility views do so in front or second month. So it's really all March and April. If you're looking at VXX, there are more series to play around with there, more terms. But you're really keeping these positions very close. Keep in mind that volatility mean revert. So if and when this does fade, volatility very likely will decline pretty sharply.
Would you buy the VIX at this price?
No, I like what the market's expressing here. I like the selling of puts in RSX, the selling of puts in EEM. Admittedly, we don't know how this is going to play out, but this decline in RSX, I think, is an opportunity to sell volatility and put on long positions there.
Just to turn back to Russia for a second, it was incredible to see that Russia raised the benchmark interest rate, I believe, by the most since 1998, the main rate going up from 5.5% to 7%. I would have thought that would have caused a bigger spike in volatility.
Well, I think, again, if you look at VIX, it's moved up a little bit. Some markets are expressing that. Certainly, currency markets are expressing more volatility than equities, but specifically when you look at U.S. equity investors, they're less scared than you might anticipate.
The ruble certainly has seen a big sell-off.
Exactly.
Okay, one trade I know you're looking at is Sienna Corporation. Walk me through why you're bullish on the stock.
So really two catalysts that we're looking at. We're looking at specifically a trade in April expiration. We want to buy 26.30 call spreads, and against that we want to sell 21 puts. You can do that for about 40 cents. First catalyst, earnings this Thursday. We think it's very likely that they beat on revenue, that operating expenses are less than anticipated, and the street consensus right now is for 6 cents in earnings. We think that they beat that as well.
All right, so just quickly explain to me this chart we're seeing here on the... So the cost is 46 cents, but the payoff could be 8 to 1.
Exactly. So you're buying a 26 strike call, you're selling a 30 strike call, and you're also selling a 21 strike put. Now, on the downside, you're getting long should the stock go down below that 21 strike, and alternatively, you got that long exposure up to the 30 level.